I think you did a good job of introducing us. This is, in fact, the western extension of the same greenstone belt that contains the prolific Red Lake camp to the east of us. You'll see that in a minute, as well as further east, the First Mining Springpole project. So this whole area is called the Birch-Uchi greenstone belt. We have basically 100% of what you'd call the western part of that. So on this cover page here, you can see our mine and mill infrastructure in place. This is well maintained. This is permitted. So this could be brought into production relatively quickly. We are actually in the process of accessing the underground here, so we'll get into that as well. So right now, given the gold price, given how we've progressed this project over the last 13, 14 months, I see this as probably a real keystone year for 1911. Forward-looking statements, obviously lots going on in the world, lots could change the outcome of any of the statements I make in the following presentation. So as I said, fully built, permitted mill, central in the property, what you'll see shortly. It's currently configured to do 1,300 tons a day. It runs quite well between 900 to 1,300. So, you know, what we need to do is find sufficient ore to get us to that sweet spot in the mill. We can get back up and running. But on top of that, we could expand this to well over 2,200 tons a day. And I'll show you a few areas where we think the future kind of lies for increasing capacity. We have an existing 1.1 million ounce resource, which we remodeled last year. We basically rebuilt the old resource from ground up, pour it right back down to original assay certificates and verified information as far back as the 1960s, because that's about how long this property's been around, actually since the 1930s, off and on. Over 2 million ounces have been produced from this property. If you include some of the peripheral mines, which we own, it's over 2.3 million ounces in total. So a significant amount of production potential on this property remains. Many of those areas continue to be underexplored, and we now have 100% ownership of the entire area. We lie right on a very large property package of about 62,000 hectares, which you'll see. A lot of that's been consolidated either under Klondex, which owned this property from 2017 to early mid-2018, or under 1911 Gold in the 4 or 5 years following that. So recent consolidation, as I said, actually back in 2012 in the last big gold rush, this was $1 billion company with a much smaller property package than what we have today. So look at our cap structure. The main takeaways from here is that we've had a couple of successful financings over the last couple of years, brought in a number of key shareholders, particularly Eric Sprott, who's currently sitting around 17%. He's invested twice over the last 18 months. Obviously quite happy with this particular investment for him. As you can see, our share price over the last two and a half years has done quite well. We actually brought in a couple of institutions in December, ones that will be very supportive of us going forward. And we've got a number of high net worth investors, as well as a couple of strategic corporate investors that have about a 4% and 7% position in the company. On top of that, you have good, solid insider ownership there. We bought all our shares either on the market or in financing, so no cheap stock in this particular company. This is the management team we put together. I basically rebuilt this group over the last year and a half as we pivoted it away from what was more of a regional exploration focus historically to what I call now more of a restart strategy as we look to progress towards a return to production over the next 2 years. We needed a team that was capable of developing resources, which we got with McKelly. He came from New Gold, over 30 years plus experience, all in operating mines, as well as Gary O'Connor, very experienced in developing operations, formerly the Manitoba Gold CEO. We work very closely as he's taken the executive chair role. And then on top of that, we brought Eric Vignette in as an advisor with the idea that over time, Eric's role is going to increase as we get closer to production. And we most recently brought in a senior mine engineer to work under Eric Vignette, June Kim. I look forward to kind of seeing ideas that he's going to come out with as we get to the mine site next week. This is where we lie. A very large greenstone belt, quite prolific, over 30 million ounces produced in this area alone. As I mentioned earlier, over 2.3 million ounces produced here. We have 100% of this greenstone belt right here, right across this major fault structure, which runs across to the east here. This is the main feeding structure for this entire area. And then there's a number of shear veins, which I'll show you, that kind of come off of this and feed into areas where there's very favorable host rock and creates these very large underground deposits. This is our property again. You can see here a road access right through the middle of the property, this brown line, and then also a high power hydro line, this green line. Over 30 megs of electricity come to our site. And Manitoba is known as the second cheapest electricity in Canada. I can't beat Quebec, but I can beat every other province, and this is green energy coming here. Got 3 historic producers down here in the southeastern part of the property packaged area we generally call Central Manitoba. But within there, there's a couple of historic producers. There's also a high-grade resource here at Ogama Rockland, another 340,000 ounces at plus 8 grams per ton. That's not part of the 1.1 I quoted earlier. That's totally separate. This is an area we're looking to redevelop and re-explore here, probably towards the end of this year. We're going to rebuild this resource as well and see what we can make out of it. So again, permitted infrastructure. At one point, this place was producing well over 2,500, processing over 2,500 tons a day, producing around 80 to 90,000 ounces. This is back in 2011 and 12. Got into a bit of challenges in 2013 and 14 with the direction they were taking in the underground, which I'll get into in a second. But really good historical recoveries, clean running ore, discharged twice to the environment here if needed during the year because of the nature of the ore. There's low sulfur, no bad material in there, no cyanide, low cyanide, and low acid bearing rock here. So really nice, clean running ore, road access throughout. And as I said earlier, everything in there is permitted to operate. It's classified as temporary suspension right now, which is easy to get out of with additional safety and personnel on staff. This is a look, a zoom into our kind of our mine lease areas. We keep referring to it. This is this, going back here, this is the star right here in the middle. It is a series of favorable host rock structures. This blue, this green, and this brown line. Now this blue is kind of, there's a few areas in there. Generally, it's not good host rock, but there's a few areas we call dacitic breccia, very technical language, where it is gold bearing and it has been mines. The Cohiba mine is in there, the Hinge mine is in there. These have produced around 400 and 200,000 ounces respectively, and they still have a significant amount of resource in them. But the main prolific rock structures have been this San Antonio gabbro here and this shoreline basalt structure here. And then these dotted blue lines crossing this map are basically showing you those shear veins, which are coming off that Wanapagao fault structure, bringing the gold through there, and then they're coming through these favorable host rocks. Wherever they hit the host rock, which is very porous, they kind of blow out and create these deposits, sometimes economic and sometimes not. But these kind of dip down northeast. So every mine you see in here, the San Antonio mine, the Cohiba mine, the Hinge mine, they start here and then they kind of go this direction underground. So you follow them down. They tend to be fairly continuous. They do tend to narrow and then swell again. They're particularly narrower on surface, so a lot of our recent drill results are showing high grade but narrower. We expect those to grow as we follow those down. But there are a number of targets on here that we have not tested that look quite favorable, one being this area right here. It's in the lake, so we didn't get to it this year. We'll get to it in the fall. We might be able to drill that when we're underground, which is happening quite soon. But we did test this target structure, and I'm probably going to focus a little bit more on this area as I get into the next slide. So this is looking at the same thing, but now we've done a crosscut. So we're looking at it kind of from the side. This is the historic mine. This lies about 200-300 meters to the northwest of this big red blob here and this colored blob down here. Now what these represent is 310,000 ounces of known resource in our existing 43101 resource. This is a high-grade area. This is an area that was quite prolific for Klondike when they were drilling it back in 2017. Some of the best intersections are in here. Very high grade, large widths compared to some of the other areas. And what's exciting for us is this area that we've been drilling on surface, which we call the SAM Southeast, which is really just means it's southeast of the San Antonio mine, connects, looks like it lines up. It's the same structural unit is this area down here. So we've created over a 1 kilometer area where we can fill in. We're going to get underground here into the 16, and we're going to start following this area down. So we've got a very large potential structure here, which is easily has the potential to be about the same size as what they were mining here at the San Antonio mine. And this is within 200-300 meters of our existing infrastructure. So even though it isn't part of the existing mine, it's easy to drift over. It's going to be easy to incorporate into our near-term mine plan. We'll have at least 2 more news releases out over the next 5 to 6 weeks that will be specifically incorporating the results from this program. We're actually have a few other target areas that look pretty good, but this is one that will definitely be a big part of our focus. We've also got this western unit here, which has been pretty good. It's a little bit narrower, but it's also open. It's really been untested historically. We've been getting some pretty good results here. This one will probably come out a little bit later because we got back into this area later. But what I like about here is we've actually got this known Cartwright resource, which is actually on a separate unit, but this could be a connection between those two. And you could bring that underground right into the mine, comes up here through that head frame we saw on that cover page right into the mill. So easy movement of ore. And as the last guy was saying, once you start connecting these areas underground, the movement and optimization of ore handling underground is quite a bit easier than trucking it and trying to ship it around on surface. If you can do it all on conveyors, makes things a lot quicker, a lot less can go wrong. So big open area here. We're drilling other targets on surface, and we are about to get underground. So this is just another look at it. And what I like about this slide is really, as you can see very clearly, these are a series of stacked structures on top of each other. It's basically host rock, shear vein hits the host rock, creates a deposit. If it hits one of the other host rocks, that's another deposit, potentially. And then another host rock over at that diacetic breccia in that light blue area we were looking at earlier, another deposit, potentially. And these tend to be all very continuous as you follow them down dip underground. Lots of open potential between these past producers. Cohiba, that's a relatively new mine, untested at depth. Hinged, untested at depth. We've got this large area of mineral, these stars, this mineralization not in the resource, lines up with Hinge. So we've got lots of open area targets that we'll start testing here over the next 6 months once we get underground, which should happen over the next 2 to 3 weeks. Long term, we have a very large prospective gold belt. As I said earlier, I have a number of past producers down here in what we call the central Manitoba area, but there are actually a number of different projects here. Very similar types of geology down here is what you've got up here. Right in the middle, there's a Pluton unit, which is not, it's not favorable for any kind of mineralization. So all the shear structures fold around that area and come down into this area. So the same gold that's going in here intersects with the same types of favorable host rock down in this area. That's why you see such a concentration of gold on surface when you're sampling here. We've done drilling in this area. We've had decent results on surface, still relatively shallow, very open at depth. And once we complete a restart up here, our focus will shift to creating new mines down in this area, starting off potentially with that Ogama Rockland resource, which already has a known 43101 resource, high grade. But we have potential at this, what we central Manitoba, within central Manitoba. But there's also this old Gunner mine, and there's a huge trend structure between these two areas that's wide open. So we got a lot of room to grow this property. And then longer term, there are other prospects across this property that have a lot of potential to contain significant mines. So what went wrong here? Why are we still trading at a $40–45 million market cap? Historically, this, as I said, this was a very large company back in 2012 on just one single asset. What happened there was a decision to really push the tons through the mill. They upsized the size of the mill, tried to get capacity in order to reach a 150 to 200,000 ounce target, which was something that, if any of you were around back then, was quite favorable in the bankers' eyes. It was, let's get 150. You're going to be in a totally different class. You're going to be a $2 billion company. And the management team at the time decided that was the route to go. So it was push as much tons through the mill as you can in order to generate ounces. What happened? Very poor mine planning, no development, no delineation drilling, just chasing veins, losing track of veins, having to double back, refocus where it was. What would you do differently now? You'd start small. You build up a number of working faces. You actually identify new resources close to the mine, exactly what we're doing right now. And then you scale up slowly. Start at 800–900 tons of feed. Use your knowledge, use your understanding to bring other areas online. We've got 2 other mines close to the true north that we've brought into production. And then longer term, how do you get to 150, 200,000 ounces? You go to that southeastern part of the property, you find another true north, you bring that into development. Those are kind of brownfields project areas, so relatively easy to permit. Not as easy, obviously, as starting up a historic mine, but a lot easier than a greenfields project out in the middle of nowhere. So that's the kind of long-term thinking here in the planning. There's obviously a big separation between us and where I think we should be. This feels to me more like a $200, $300 million market cap company. We've got infrastructure, we've got a large resource, we've got a high quality management team, very experienced track records that suggest that they've been successful in their past. And we've got significant infrastructure with also with a large pool of tax losses. So this is not something that's going to be taxed with quite some time. I think there's a good chance it will re-rate before the end of the year, particularly once we get underground in the next 2 to 3 weeks, and we start to kind of talk about what the targets look like down there, and we start drilling into some of these really high-grade, wider zones that we know are down there, and start to connect those with those areas we've discovered up on surface. Environmentally, as I said, low-cost hydropower. These are underground mines, low surface footprint, great community relations. We deal with 3 First Nations communities. 1 direct, the other 2 a bit indirect, as in you travel over their land to get here. Great relationships with all 3 mining communities, and the province itself is quite supportive of the company and is eager to see a producing operation happen. So right now we're focused, as I said, on resource development. We're going to get underground. We're going to start expanding the known resource, drill into some of these areas we've discovered on surface, follow them down, open that up, put together a mine plan towards the end of the year, and then come out with an updated preliminary economic assessment as we get into the end of the year, early into Q1 of 2026, to really push aggressively to get this back into production, but with a much larger resource and a much larger scope to show the path, getting to 80,000 ounces to start, to 150 to 200,000 ounces over the next 5 years. And that's it. I'm happy to answer any questions. Obviously, I went through this fairly quickly and ready to back up.
Great, Shaun. Thank you. So yeah, let's dive into the Q&A session. Lots of questions here. First is that what are the costs to upgrade the mill in the future to 2,200 ton per day? What cost? Yeah.
Yeah. So right now, the way the mill's configured is the reason why we talk about its scalability is the crushing or the grinding, the flotation cells, the refinery side is all scaled to plus 3,000 tons a day. But what the crushing circuit itself is what would need to be modified. So additional secondary crushing and cone crushers would need to be added in order to scale it up. That's what they did back in 2012 and 13. So crushing is the best because you can have mobile crushing units, you can plug and play. So you're looking at, for us to get started initially, we want to actually modify what's already there. So we're looking at about $3 million initially to fix the crushing circuit that's already in place. But to add capacity is probably another $2 to $3 million, and that's just adding additional crushing capacity so you can get a much finer grind and increase your throughput. I think also ore sorting within the underground mine is going to be part of the strategy, to be honest. We talk about it a lot. This is an ore that lends itself well to actually visible ore sorting because it's white, it's very obvious. So I wouldn't be surprised if you see us coming out with a lot of that kind of technology as we get into this.
I see. Another question from Alan is that how much drilling could be planned between southeast and the 1.2 kilometer corridor to where Klondike's have large west high-grade intercepts in 2017?
That's somebody who's been reading, or maybe I was good at explaining as I went. No, that's so we've completed about 4,000 meters already on surface. So we've managed to follow it down. We've created a lot of continuity within what we've drilled from surface, and that you'll start to see that as we get on more news releases. So we'll start to kind of expand that red blob that I was showing you earlier. Between there and what's down below, obviously we've got over 700 meters between those 2 areas. That 1.2 is kind of from top to all the way to the bottom of that area. So we don't need to drill all of that, but you're probably looking at about another 10 to 15,000 meters to follow that underground. But once we're at 16 level, and I don't think I've emphasized this enough, we expect to be at the 16 level. We're there now. We need to do work to get it ready. We need to put drill pads in. We need to put money into a bit of an exploration drift. But once that's going, you can be extremely productive underground. You're drilling shorter holes, faster holes. You don't stop. It's electric, so you're not burning a lot of diesel, so it's lower costs. You do have people running the hoist, so your overhead's a little higher, but we can be extremely productive. So that 8 to 10,000 extra meters as we follow that down, that can happen pretty quickly. And I think we expect by this time next year a lot of that piece is going to be added into a resource.